Okay, so good evening once again, and welcome to our class. This is our first class for the week, and as is our custom, we're going to review the markets. How did the markets perform last week? That's the gold market. How did it perform last week? And what's our projection for the week? Okay. I'll try to make this as fast as possible because I want to attend to some things very fast. Okay, so this was Monday, Friday, Thursday, Wednesday, Tuesday, and Monday. Okay, so this was Monday, and I remember analyzing these markets. I think last week Sunday, that's January 19th. I said that the market was going to sell to 2680 what? I said it was going to sell 2689 if I'm correct. So you can check that. But I expected it to first get to this point before selling to 27. If I remember correctly, maybe 2710 thereabouts. Okay, or 2708. Anybody that can remember, I said the market will get to 2708 first before selling, but immediately the market opened on which day was this now? It was on Monday, right? So on Sunday night stroke Monday, so the market opened and immediately it first went to our TP before ascending. Okay, and so of course Monday was a ranging day, owing to the fact that it was Trump's inauguration day. So they arranged the market. I remember we held this trade for as long as the market closed on the trade, because I believed it was still going to sell, but it wasn't meant to happen. Sometimes it goes, sometimes it doesn't. I just think the reasonable thing was to just have held the trade, to be honest. But because we had a lot of bounces, it was undecided, to be honest. The market was undecided at this point. So I expected it to still fall a bit further, to our first TP, but it didn't. It ranged throughout, and then, I just think what this just taught me is that whenever you have so much of a ranging day, like if you are in a trade and then the trade is going to profits, minus, and it's going like it's ranging. Before the market closes, just close the market. If it falls, you are going to regret it, but at least you don't lose your money. So by the time when men slept, this thing it just went up. Okay, it first came down a bit, to by about 60 pips, and then it went up and liquidated us at 27.18. Okay, so the lesson to be learned here is just that, okay, please you guys, I expect you guys to also remind me of this, right? Remind me of it whenever you see me making that mistake. Of course, because it's the market went against us, it becomes a mistake. But when we have so much of a ranging day before the market closes for that day, please let's just remind us to close it. Okay, so I will task Grace, you'll be the one reminding us of these things, right? You'll be our conscience in this class. In this group, we need to just be smart about this. So I remember, I think we made profit here. Okay. Yeah, this was the trade where we made 150 pips profit. We entered at 27.28. Actually, we were supposed to enter at 27.18, but I don't know. I won't blame myself really, but there are a lot of errors this last week. I got some analysis right, but of course there are some discrepancies, majorly owing to the fact that the market is still in a bullish run. Okay, So I discovered that majorly this week, apart from this first one, apart from this Monday trade, this week I was off the mark by about 20 pips in most of my trades, in most of my entry picks. Okay, I was off the mark by about 20 pips. I remember the class we had on Tuesday morning at 6:30 a.m. I said that that we should put our buy limit at 2718.5, which was correct at the first instance. But then I just thought, oh, there are still some places that the market might want to test. So I was expecting the market to come down to 2714.5. If anybody remembers that I asked you to change our buy limit from 2718 to 2714.5, and unfortunately the market did not get there. The market just touched, I think it was our 100 EMA on the 1 hour time frame, and then it just reversed very fast. Okay, so I had a lot of things to just unpack last week. Okay, so when I saw this, I just I think this is just a clue for me. This is just a clue for me to know when to end, like when when I'm off the mark and I just need to just quickly pick entries. Mostly, I enjoy picking two candle close above a particular point. So I remember this particular candle touched the 100 DMA and then reversed sharp. It reversed so sharp, and then the next 1 hour came. Of course, this was after this close of 1 hour. This was where we were supposed to enter, and this was exactly where we entered, right? Because it has confirmed that this low had been established, right? This low had been established. So the market was not going to get to 2714.5. It saw at 2716.6, and then I think we entered here at 2728 thereabout, and then we're able to close at 2740. Even though the market ranged a lot, we could have waited till 2749, but I was so much on the mark. I was drained. I don't like when I'm being stressed out by the market. So that's why I had to just close it at 2740. Okay. I asked to close at 2740, 41 thereabout, and then we made 150 pips on this trade. Okay, we made 150 pips on this particular trade. And okay, I remember the next okay, I think it looks like I was the only one that took this trade, because I remember also saying that you guys should set your sell limits to 2749, and our stop loss at 2759. And the beautiful thing, this was on Wednesday, the beautiful thing is that actually markets first entered 2749, and then when it went up to 2750, it got to 2758. This was the high. It did not get to 2759, and then it started dropping. And I was just hopeful that it's going to start falling, of course, because it has this after this bearish engulfing. So this one, but I think during our Thursday class I analyzed this, that this was not supposed to have happened. Like, of course, when you see this signal, this particular candle, this is wherever you see it, either it's on the 1 hour time frame, 4 hour time frame, daily time frame, weekly time frame, it's more often than not an indication that the buy is going to resume. It's a major candlestick reversal pattern. Okay, so we didn't close this. I didn't ask you to close this, and we entered another loss of about 40 pips, if I can remember. And of course that one hurts too. So what this just tells me generally is that this week and going forward, we have to, let me not say we, I in personal, I have to number one, from the first mistake, okay, I have to close when there is too much range. Okay, close trades when there are too much range for the whole day. Close the trade before the market closes. Okay, so I'm trying to write it down so I won't forget. close trades before that's range during the day. I think Grace, please help me jot that down. You are still on this call.
Okay.
All right, thank you. So the first thing is to make sure that we close whenever we see a ranging day. Before that market closes, either we are at profit or loss. Let's just close the trade, right? While the market is still range before the market closes. Okay, that was the first lesson to unpack from here. And then the second lesson is that choose whenever our target is not yet hit, right? When our trade is not picked by, our limit order is not picked, when you just see two candlesticks close above or below that setup area, just know that okay, that's an indication was to buy, right? I told you guys that that's an indication to buy in this case, and on the other hand, it's an indication to sell. So I told you guys something that our 1 hour is our fulcrum. That's our fulcrum for this strategy, for this setup, and it really fails. If the 1 hour candle fails, it's most likely because maybe the trader is not perceptive enough. That's in this case me. If I'm not perceptive enough, or I have a bias, like I'm marrying my bias. So that's the crazy thing that can happen. That's one of the craziest things that can happen. I saw very beautiful opportunities last week, and it's just unfortunately we could not maximize them because mostly because of bias. Okay, and it's always important to know where we are in the market. Of course, when we were still here on Wednesday, when we were still at this point, 27.59 thereabouts, I knew that we were still on the buy trend. I knew we were still in the buy trend, but I expected a temporary sell to 27.33 or 27.28. But gold is unapologetic. So since we have our 1 hour time frame as our fulcrum, that is where that is like the center of gravity of our trade, right? Anything that is happening on the daily, weekly, on the other, the lower time frame, on the higher time frame, the 1 hour is your strong indicator that okay, this is when you should close your trade or when you should enter your trade. That's just the honest truth. Okay, but if we can learn to manage our emotions, if we can learn to be disciplined, right? If we decide to be, if we learn to be disciplined, if we are disciplined about when you see something that looks off, and then if we quickly close our trade or enter a trade, we are going to be safe. That's just the honest truth. Okay. So this trade, it's so painful that we lost on it also. And then I remember, I think I said we should enter again, if I'm correct. Yeah. Okay, we entered the trade, and because when we saw this, I think when we saw this candle, gold was crazy on Wednesday also. It ranged pretty much. Okay, we entered the trade at 55, and then when I saw this candle, it was around 3 p.m. if I'm correct. Okay. I think it was around 3 p.m. our Nigerian time. And then I also asked you guys to close, and eventually, I think we lost about 30 pips on this trade. Eventually, it started falling. Okay, and what happened again? So this was Thursday. I remember we picked another trade. We picked our first trade. We picked our first trade on Thursday. I guess we made 90 pips on this trade, on this particular trade, if I'm correct. Well, I'm trying to remember our entry here on Thursday. Thursday. Yeah, we first picked our entry. Okay, we picked a buy after this rejection. We picked a buy from 27.45 thereabouts, and then we rolled it up to 27.51. We made about 60 pips on this trade. We made 60 pips. And then, my analysis, I was actually correct. When I saw this inversion, this candle, like I said, your 1 hour is gold. Your 1 hour combined with your EMA, if you understand candlestick patterns, with your EMA on your 1 hour, you can hardly go wrong. Okay, the what you just need is that, okay, don't be married to a bias. That's a discipline you need to now need to cultivate. But 1 hour is just a lifesaver. That's the honest truth. Is a lifesaver. Okay, so I think we entered at about 27.49 on this trade. We entered 27.49. I asked you to enter with half your lot. Put your stop loss at 27.55. That was like 60 pips risk. And then when this candle closed, I asked you to enter another sell. Okay. Now, what happened here? Someone might just say it's not supposed to happen. Like I was dumbfounded. That was the truth, because I was expecting the market to sell to 27.33, and we were just short of about how many pips? 20 pips. Also in this one, this was so painful. This trade is the most painful trade of last week for me. Like, it was the most. I almost cried. That was why I did not send any signal to you guys on Friday. Right? I didn't send any signal to you guys because this trade actually, like, should I say it humbled me now? But I was really hurt by the trade. So I just knew that I needed to take the day off to play basketball so that I can clear my mind. So I used my Friday to play basketball, and this was just so painful, so painful. Okay, there is no trade. We didn't trade this on Friday. Okay, so this trade, and okay, now there is a reason there was this rejection at 35, right? Of course, the market will not tell you there is a reason, but we can see what's played out. Now, when we were waiting at 30, when it's 35 and then it's reversed, it's normal to say, oh, let's wait for the next candle. Now, the next candle closed above this 35. Now, the market reaching 35 and not getting to our next liquidity point of 33. Let me show you that point, that liquidity point. This is it. Okay, I remember I said that our TP should be at 27.28, right? Which was a liquidity zone, which is let me bring it here. This is 27.20. Where is it? I know the liquidity zone around this place. Okay, so this is, I want to draw the line to it. So around here, we have some liquidity pieces, right? All this place, this point, right? So I just knew, just to be conservative, actually, I said, oh, let's put our TP at 27.28 at first, or 27.20, what is that? 27.28 or 29, I can't remember. Okay, and just before conservative, I said let's put at 27.20 at 3, which was this place, right? And then the market did not get there. Now, whenever you see this gap, typically I've studied gold. This happens when there is this usually happens when the market wants to continue its trend. So what happened here was actually a fake out, right? They knew with this they could trap people in their sell positions. That's the market movers now, right? They knew that they could trap people with this. What? Remember that our overall trend is still buy, but I was expecting to get to 33 at least. But it's rejecting this 33, it formed the low as 35, and then the next candle closes above this line, above this candle. Then again, we have another candle close, another bullish candle close above this. Now, just like what happened here, I'm always looking for my circle in this place. Let me look for it. Okay, so just as what happened here, I need to let me. Okay, so just as what happened with this candle, with these two candles, and what happened where again, and what happened here on Monday, right? I think we got this one right. We were able to discern that okay, we are supposed to be buying from here. But of course, that was because we were anticipating buy. So if you're anticipating, it's always good. It's always easy to detect. This was the same thing that happened here. Like I want you guys to observe and see patterns in this thing, so that um, you could also be able to analyze the market for yourselves. You know, you're able to analyze whenever you see the candlesticks are very very symbolic, especially in the 1 hour time frame. Very 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 symbolic. What's this? What's this? Okay. They are very, very symbolic. So you have a bearish candle here, and then you have two reversal bullish candles, right? A bearish candle, a bearish pattern. In fact, this 1, 2, 3, it confirms a bearish pattern. Number one, you have a 1 hour close below, then this, then this. Now, but immediately you saw this candle close above this, the last bearish candle, and then another candle close, just like it is buying. Right? The same thing that happened here. When this happened, you might still be in your doubt, but this is a very strong indication that it might buy actually. Then the next candle closes, just close the trade. It means the guy is not selling, it wants to buy. Just leave it, close it. Okay? And then look at what happened then the next time. Right? Now it did not get to 33 before it rejected. It did not get to the main liquidity point before rejecting. That signifies that what? You should watch out. So the first 1 hour closed above it, okay, but it was still around the EMA. The second one closed. In fact, when you see the first one closed, just first close this cell and close your cell. The cell you are taking it, just close it, right, and wait, right. But because I was just kind of optimistic that okay, this guy is going to sell. This guy is going to sell, and so I was. Yeah, we are flogged. Not I only. We are flogged mercilessly by this because this was okay, but it happened because of bias, holding on to a bias. You know, at a the market was just telling us that okay, guys, we are not selling yet. We are seeing a bullish trend. Okay, so that was what happened here. And look at it. When this candle, immediately you saw this candle close above, we should have closed it here. But this second one confirms it's closed bullish. We should just have closed it here. And look at the next candle, brother just went up, bam. Went up like crazy. And then, so I knew when I saw this break in structure, I knew that Friday was going to buy, but I was just so demoralized, to be honest. I didn't want to expose us to so much risk, and I just feel the market is not running away. Let's just take the time to rest, and then by Monday we are going to come back. And so that's that on markets review. So let's talk about the preview for next week. Okay. So we have an interesting pattern that has formed here. For those who are familiar with candlestick trading, with chart patterns and candlestick reversal patterns, we know that this is called head and shoulder. So this is head and then the shoulder. Although the shoulder here is, I can say it's almost fully formed, but it looks like it's formed already. So these are head and shoulder pattern on the 1 hour that is forming already. And so let me bring this. So these are shoulder. So this is shoulder. Then these are another shoulder. Okay, and then this is head. So we have head and shoulder forming already. Okay. So what is happening currently? It signifies what? A chart reversal pattern, and it's showing that okay, this man is going to fall. Okay, he's going to fall. So this what 1 hour is indicating. In fact, what is happening, what I've just seen here is like immediately market opens, it might not even bother to go up, or if it goes up, it's definitely, it might not. The likelihood that it will get to this point when the market opens is very, very slim, very, very slim. Some people have been saying that the market is going to create an all-time high. They are correct, but it's just that it might not create an all-time high yet. The all-time high of gold currently is 27.90, but yesterday, on Friday, it goes to 27.86. Okay, and with what I am seeing on my 1 hour, okay, daily cannot bring that out yet fully. The 4 hour cannot bring it here fully, but on my 1 hour, with what I've been seeing, of course, with this head and shoulder pattern, which is the first significance. Okay, number one, not even the head and shoulder pattern to start with. This I've forgotten what they call this, but this is a reversal pattern in the market. Of course, it's not like all the reversal patterns happen. Like it doesn't. It doesn't. It's not like all the reversal patterns indicates that, okay. It might just indicate a temporary sell or a temporary buy. I mean the reversal patterns, but it does not necessarily, like, it works. That's just what I'm trying to say. It works. Now it doesn't mean that it might sell for a long time or buy for a long time. But just know that, okay, it's a worthy thing to just note in your candlestick, in your trading journey, right? Like, you can't ignore these things. So I think I'm going to share a PDF with you guys so that you can read up on candlestick reversal patterns and chart patterns. I had to reach them to also understand these things actually. Okay, so this is what we are having currently. Okay, I'm coming. So this is what we're having currently, and then this is the shoulder. Now we have this bearish candle that closes below. It closes below all these guys here. It closes below below the open of the last 4 candles, of the last 3 candles, right? And then this bearish close. This usually, when you see this kind of pattern, number one, we've seen this first one. I've forgotten this reversal pattern. What it is called? I think this is real track. If anybody, I think this is a real track, right? Real track, a bullish and then a bearish, or a bearish or bullish. So this is a real track, and then you have this inverted hammer after it, which definitely signifies a sell. Okay, and then we have this next block of candle that closes below the open of the last 3 bullish candles. Okay, and then this small konkolo here, this small tontolo in this place, this inverted hammer, or is it doji now that we call it tombstone, right? So this is just like a signifier that the market is going to fall, on Monday. That's tomorrow. As soon as the market opens, it might fall. It might just fall, right? I wish I was in this trade before the market closed last week, but of course, I was just observing. I was placing the observer role, and hopefully the market does not move so fast before I gain my entry. So, okay, so this is the first thing to confirm. Of course, we've confirmed with our railroad track and then our inverted hammer, right? And then the head and shoulder. That's 3 confirmations on this pattern alone. Then the first one, like I always say, that is my EMAs. So I want to share my EMA screen. So this is the guy I'm talking about. Okay, my EMA. And remember, for my EMA, I always tell you something, that for entry position, either for your sell or for your buy, right? Essentially, I've perfected this for myself very well, and I've perfected it also for my buy. Hopefully, I am able to always put that out. So for my buy setup, now, does anybody remember what I say about buy setup? Like, how do you enter a buy setup? A sell setup rather, using your EMA. Please feel free to unmute your mic now. I want you guys to talk. You want me to call names? This is a class. I want you guys to talk. So, Brighton Malanga. I want you to talk, please. Brighton, how do we confirm with our EMA that we should enter for a cell?
No, boss. I'm not sure. I think I had missed the class where you explained that concept on EMA.
You don't think what, sir?
Sorry, I couldn't get you clearly.
Sorry, I didn't get you.
Sorry?
Okay. I don't know what's happening. I don't know what's happening to my screen. Okay. Okay. So I was asking who can help us? Kenny. How do we get our EMA? I said, what's the question? I'm asking, how do we know when to enter for a cell using our candlestick patterns with our EMA? Oh, can you tell us? Hello? Are you there? Kenny?
Hello? Are you hearing me?
Yes, I can hear you.
Can you come again with the question?
How do you know if to enter for a cell? How do you know you should enter a cell setup? Using your candlestick reversal pattern and your EMAs, your moving averages.
Okay. To me, if my spell candle, if I have a self bearish candle,
Okay.
closing below my EMA.
Which of the EMAs?
200 EMA.
That's not correct.
Wow.
These are I'm going to know those who have been following this class and those who have not been following the class. Please, you can mute yourself, Kenny. And I hope you listen. Yes. So who else should I call? Grace. Grace, how do you know when to enter a cell using your EMA on the 1 hour time frame? Is Grace there?
No, sir, Grace is not here.
Answer me, Joe. Oh, yeah. Been attending this class, Grace. We are talk, so I can close this class very quickly.
It close below that third line, Habi.
Which third line?
I don't know whether it's color pink.
Which one is color pink? Like, you guys, you have to be listening in class and you have to be paying attention. I've said this time and again. Like, we are not just having this class for the purpose of just having the class. I want you guys to understand my thought process. I want you to see what I see, right? And if anybody is observant, if you have been attending this class, you see that most of the trades we've been picking since analyzing, after analyzing in the class, they are correct. It's just that, okay, we have to know when to leave the trades, and bringing you guys, the reason I'm bringing you guys to this is because I I know I can't do it by myself. I need your help, right? So when you see what I see, when you understand my thought process, in case we enter a trade and there has been a mistake, or not even a mistake, when you see that, okay, the market is going against us, I'm deliberately saying all these errors. I don't push my blame to the markets. I push my blame to myself when I'm not able to discern what the market is doing, right? That's when I push my blame to myself. So the market is always correct, but it is possible for you as a person, as a trader, to be wrong, right? In your judgment, in your decision making. So I need you guys to follow what I'm doing, understand what is going on. In fact, if you have better things, if you have better understanding about this thing, you can contribute. It's not a man's land. It's not. I don't have to be the Lord and overseer of this thing. I need your help. I'm humbly asking, and I need you. One of the ways you can help me is to understand what I'm teaching you. Right? This thing that I'm doing, a lot of people, some people have collected a good sum of money from you, right? But I want you guys, this is a teamwork. I want us to have a team. I want us to play together as a team. And I need you to understand, to follow what I'm teaching you. So I've talked about these EMAs, like how to know when to enter for a sell, when to enter for a buy. I've said it time and again. And how to exit a trade. I've said it time and again. Right? And I need your help, guys. I really need you to talk. Please. Okay? So, Grace, you did not get it. Katumu, sorry. Katumu has run away with Jesus Christ. Mazai dogs, rather. Can you help us? Do you have an idea?
Yes, but I'm on transit. That is why I can't speak right now.
Okay. So, Vic, any idea how to know when do you enter for a sell on the 1 hour time frame using your EMA? Vic, is Vic there? Please unmute yourself. Okay. It looks like I have to help myself with this. Go of time. All right. So how do you know when to enter for a sell setup? So I said that whenever you see candlesticks reversing, your candles reversing gradually, the one and only time where your sell is confirmed, when it is adequately confirmed, is when this is the time. It is when you see two candles close below your 5 and 13 EMA. Two candles close below your 5 and 13 EMA. And I remember telling you, you can see I'm placing my cursor on the red wavy line. That's my 5 EMA, right? And this is my yellow wavy line, which is my 13 EMA, 13 moving average. So I can see two bearish candles close below it. Two bearish candles close below this. If it were a bearish candle and a bullish candle, I won't enter for a sell yet, right? You can see this, right? This was why I did not enter for a sell at this point. This bearish candle and then was a bullish candle. I will not enter for a sell. If I see another bearish candle and a bullish candle, I will not enter for a sell. But when I see two bearish candles close below my 5 and 13 EMA, I know that is a strong indication for what? Sell. So I just place my sell here and put my stop loss above the high here. So now it means that immediately market opens, my sell is going to be at 27.70 and my stop loss is going to be at what? 27.86 or 86.5. That's where my stop loss is going to be, right? And I've confirmed this time and again. Like, it's something that has worked time and again, right? What you just need is, when to leave your trade. Okay, now look at this now. Now, this was an indication that the market was going to sell because you have a bearish engulfing candle in this part. Let me okay. Okay. So this is it here. Okay, this bearish candle is an indication that it's going to sell, right? But to further confirm with my EMA, I will wait till I see two bearish candles close below. Of course, it was already late at this point because we didn't really get two candles close. But this is one of those exceptions, right? So this is one of those exceptions. But let me look for another place where it's really played out. It's panned out fine. Okay. Now this might be late, but the two candles close below your 13, your 5 and 13 EMA, it almost always works. Okay, it's not showing very well here also. Let me look for another place where it's really played out fine. Okay, this is one of it. This is one of those places, right? This candle close, bearish close, another bearish close below my 5 and 13 EMA. This is an indication for your sell. Put your sell here, your stop loss here. Of course, it does not mean that it will not first range a bit upward, but eventually it will come down. Okay? So this is something that you can try, like backtest a lot. Right? You can backtest for the buy. It's the same thing for the buy and the sell, actually. It works the same way for your buy and sell. Now look at this place. Two candles close, two bearish candles close below my 5 and 13 EMA. This one and this one. This candle and this candle close below. Enter sell, put your stop loss here. Where's your TP going to be? Your TP should be at what's it called? On your 200 EMA here. Okay? So this alone is about how many pips here? From your point of entry here, of course, to your stop loss, this is about 153 pips. But to this place, this is 388 pips. So this is about more than 1:2. This is about 1:2. This is about 2.5. Right? This is like 2.5 RR. Okay? So this thing, you have to backtest it too. You guys have to really backtest it. I can't say more than. And you have to watch the videos. If you miss any video, go back and watch it. Go back and watch the videos you missed. That's how you can understand what we are doing. So again, I'm saying this again, to further confirm, everything we have said. We have said the candlestick reversal pattern, that's the railroad track, then the inverted hammer, right? These two setups alone, they have confirmed the sell. Then we have the head and shoulder pattern, right? Which are the chart patterns. Head and shoulder pattern. That's the third confirmation that we are going to sell. And the last and final confirmation using the EMA. This EMA is just to solidify that, okay, what you are doing is correct, is what you sell. You have the two candlestick close, two bearish candle close below your 5 and 13 EMA. So immediately this market opens, because this is already two closes below the 5 and 13 EMA, I just enter for a sell here, put my stop loss here. So I will be risking about 150 pips. But where's my TP going to be? Now, my TP is going to be here at 27.28. On this my 200 EMA, right? Why is it not here? Of course, you can take some partials here when you see that 50 EMA, but I doubt it's going to stop at 50 EMA, and this is the reason. We've had at least 3 bounces off of my 50 EMA. Now, this thing is not complex, but it might look a little bit complex, but you find out that the more we learn, the more we do this class, you see that it's not complex at all. I would like you guys to be taking notes. You have to be taking notes, to be honest. Okay? So, when you see bounces, 3 bounces on your 50 EMA, it's most likely that the bounce, that your 50 EMA movement on your 50 EMA is complete. Most likely, it might be that the movement of 50 EMA is complete. Okay, but it's not. It's like the exception, not the rule. Okay, so look at this first bounce. One, after the market leaves your 200 EMA. This happened on January 13. The first bounce happened on January 15. Bounce on EMA 1. Then the second bounce, this was last week Monday. This was January 20. Okay, the day of Trump's inauguration 2. And then on Thursday, a third bounce 3. Okay, now apart from these 3 bounces, one other thing is that it has satisfied the requirements for a sell. And how do I mean? After this third bounce, now the market bounced on our 100 EMA. This is my 100 EMA. Sorry, my 25 EMA rather. This is my 25 EMA. It bounced on 25 EMA here. Then it bounced off of my 13 EMA here. Just after the 25 EMA. Bounced on my 13 EMA. Okay, and if you don't even want to count that because it's too close, it bounced on 13 EMA here. And then what? It formed an inversion, right? And you have 2 candles close, two bearish candles close below my 5 and 13 EMA. So this is my 4th confirmation, fourth confirmation rather. And then I just know that this guy is going to sell. Of course, it might first come down here, come to 62, 27.62, right, and react a little bit upward before it finally comes down. But I think this market cycle is complete. Okay, our time is almost up. There's also something I need to show you guys. I think I will just briefly touch on it, and then on Tuesday, if God gives us the grace, I'm going to elaborate on it. Okay, so if you open your gold chart, if you analyze your gold chart, you see that the market has been buying consecutively for the past 5 weeks consecutively, right? And now the market has, I'm sure you must have heard this, what we call the trading cycle, right? So I don't know for other peers, but I've noticed for gold that a trading cycle typically takes 7, 14, 21, 28 days, right? But for gold, that means 1 week, 2 weeks, 3 weeks, right? That's a trading cycle. So gold, they are typically, if you analyze what I'm saying using your 1 hour time frame, you see that usually when gold buys for 3 weeks in a row, it will sell for 1 week. It will sell for 1 week, right? Most of the time. If gold should buy for 3 weeks in a row, it will sell for 1 week and range for another week, right? Or it could buy for 3 weeks in a row and it will range for 1 week and then sell. And there are times that it will buy for 4 weeks, 5 weeks, but eventually it will sell. No market buys forever or sells forever. At some point, it's going to turn. Okay? So I believe gold has come to its wit's end at this point. Number one, because all through December, it was buying. And then for all of January, we've had 3 weeks in January, and it has bought. And with all these indicators that have signified that this guy is going to sell, I believe that the last week of January, which is starting today, gold is going to fall. Okay? Now, my projection is that gold is going to fall. First off, it's going to fall to 27 thereabout. Wherever this guy is, our 200 EMA is, by the time it falls, it's going to first make a stop at there, very sure. Now, from here, it might bounce a little bit up, or it might just keep selling down to meet our 800 EMA. Okay? But at least one thing I'm quite sure of, based on my experience with the market, is that I believe gold is going to fall to this point, 27 this week. Okay? So actually, if I should see this trade, I'm able to enter, and I'm able to enter at with a good lot size. I believe that gold is going to fall to this point. So this is about from 2770 to 2728. Let's say 2728. That's about how many pips now? So this is about 420 pips at a go. Now this could happen tomorrow, or it could happen between tomorrow and Tuesday. Okay, but I'm quite sure, right? Let me say I'm 51% sure. Actually, I'm more sure than that. Let's just say 50. I'm tipping very much towards sell, owing to all these indications that gold is going to sell to 27, 28. Okay, so that's my analysis with you guys. I'm going to just draw this on my trading view for you guys to see. Coming. Okay. So I'm just going to draw that so that you guys can see it. So I believe with everything I've seen that gold is not taking the all-time high out yet. Okay, and then that is going to. So this is what I'm believing is going to happen, and then that is going to sell to 27, 28. Okay, so this is about 2.7 RR, about 2.8 RR from here. So this is what I believe about gold. This is what I believe is going to happen in the next 1 or 2 days, or at least conservatively, let's say within this week. Let's say within this week. So if we're able to catch only this trade this week, and we don't take any other trade, we should be contented, really. Okay. So this is my preview for the next for the coming week. For this week, we are starting tomorrow. Rather. Yeah. So that's it, guys. But do you have any questions? I'd like you guys to have questions. If you have questions, if you have a contrary view, please, you are very welcome. Hello, please, guys, I need you guys to talk. Speak up. If you want us to continue this class, you guys have to talk. I'm very serious.
Can I ask a quick one?
Okay, I'm listening.
Hello, coach. Can you hear me?
On the.
All right. Brighton is talking first. Yes, I can hear you, Omadugui. But Brighton is talking first. Can you? Yeah. Yeah, Brighton, please. Let me hear from you.
Yes, I wanted to find out. So, in terms of the market direction, we also use the hour and also for entries to scale down when you send out a signal. So you.
Okay. For our entry, I've told you the indications for me to enter a confirm. That's to enter a very what's the word I'm looking for? To enter a sell or a buy entry that I will have a peace of mind about, right? Is that I have to see if it is for sell, 2 bearish candles close below my 5 and 15, below my 5 and 13 EMA. That's for a sell. Or 2 bullish candles close above my 5 215 EMA to buy. Okay, that's my entry position. Now my exit position is also going to be determined by, number one, it's going to be determined primarily by my moving average, my 50 or 200 moving average. Now, every other moving average between those can actually work also. That's your 100 moving average, your 150 moving average, okay, your 175 moving average, or even your 800 moving average. Like, those are very strong indicators because, like I've said in previous classes, that our moving averages, they tally with liquidity points, right? Now, what I showed you guys the other time, that okay, our stop loss is going to be, what do I call it? Our TP is going to be at 27.28, and I showed you on the Meta 5 now. When I showed you on the Meta 5, the 27.28 region is a strong liquidity zone. It's also a liquidity zone. I've shown you before. And your moving average, your 200 moving average is on it, right? Now, I expect that gold will come down here to hit my 15 EMA. It might is a strong word. It might, if it penetrates below it, like what happened here, it did not penetrate below this, right? If you remember this trade on Thursday, we picked this, we made 60 pips, right? Because it penetrated into it, but it closed above. So I entered buy. But I knew that, okay, there might be a blockade here, right? And we got out of this trade at 27.51, made 60 pips. And then I saw an inverted hammer. And then I entered for a sell again. Now, this closed below the 50 EMA. But the next candle closed above. And then another candle closed above. Right, so this was already an indication what to start buying this trade. Put your stop loss here. This means if you had decoded this easily earlier, we'll have just reached 110 pips. Number one, we'll have taken a break even on our trade because we entered at 27.79 here. Right, we'll have taken a break even. Enter for a buy. Put your stop loss here. Reach 110 pips, and of course, maybe we'll have taken our take profit somewhere around here. Right, so we'll have made about 700 pips if I had known that easily. Now, here if we enter our sell, because our two candles, we have two bearish candles close below our 5 and 13 EMA, and then our TP. Now, these are tentative TP, right? But I believe it's going to get here. But in case it does not even get here, what am I looking for? How will I be sure that we are not going to get here soon, or we should take our profits maybe somewhere here or somewhere here? What I'm looking for now will be that, okay, let me share the screen for my Meta 5 now. I just hope this is as clear as possible. That's my prayer. Okay. Now, with all I've shown you now, you see that there are bounces, that is entries and exit points on your EMAs, right? This is your 25 EMA that is indicated by this peach color. This is my 50 EMA indicated by blue. This is what 100 EMA indicated by this gold color. Then this is this colorless color I will call it now. Something is not red. Okay, this crimson color. This is my 150 and then my 200. Now, when the market comes down, let's say it penetrates below my 50 EMA and it gets to my 100 EMA. Now, on my 100 EMA, what I only need to see to know that I should exit this trade is that when I see a candlestick reversal pattern, right, on top of this, we are selling. If I see a candlestick reversal pattern on top of this, and what do I mean by candlestick reversal pattern? It means after you saw a sell candle, then you see the first buy candle close above it, and maybe another buy candle close above. Immediately, in fact, if you see a buy candle close above, right, is a very strong reason to close that trade, right? Of course, we take our sell here and we are projecting that, okay, our sell is going to get to this. We are going to take our profit here. But when you see a candlestick reversal pattern, like what happened here, when you see a candlestick reversal pattern, like as we see, as we have seen that it happened here, this was a bearish candle below the 50 MA, and then this closed above. This alone is a strong indication that you should just close this trade, close it, secure your profit. Now, if you have another candlestick close above, that's another buy candle that closes, another bullish candle that closes above these two. Just know that, okay, Mr. Man, it is time to just exit this trade. So that's what we should be watching out for this week. If you see a candle or two candle closes above your above our EMA, above our moving average, either here or here or here or here, just know that, okay, this is time to exit this trade. I don't know if my explanation is clear enough. Brighton. Do I make sense? Did I make sense?
Yes, thank you. It's very clear. Thank you.
Are you very sure?
Yes, I'm sure.
Okay. Is there anybody that does not get what I just explained? All right. In the absence of none. Enigma, please, you can speak up now. Sorry.
Can you guys hear me?
Yeah. Brighton, please, you can mute your mic.
Hello?
Yeah, we can hear you.
Okay. I'm having difficulty hearing you anyways. So, but
Okay.
I just needed an assistance too. I'm not very good with the EMA indicators. I've not been using them.
Okay.
And if you could kindly give me the breakdown of the EMAs you're using. Now, with the explanation you have provided, I'm very clear on how you use your 5 and 13 EMAs. So if you could just kindly, probably on the WhatsApp group, drop the other EMAs and the coloration that's used for them, so I can mark mine and use them as confluences as well.
All right. I've done that before, but I will do it again. I'll drop it again, I guess. I think probably that would be inside the. Should I do it inside the accountability group or the announcement? I don't want the signal group is kind of crowded. I just want the right thing to go to the. Maybe we just create another group where we can drop details. But I will do that. I'll do that. Did you hear? Okay. All right. So, in the absence of, do you still have any question? Vic, Grace, Kenny, Mazai, Docs. Any questions? Okay. In the absence of none, I think this is where we draw the curtain for today. Okay, Mazai, you want to talk?
No. I said no question. No question, sir.
All right. So thank you very much, guys, for coming for today's class. I will drop it in our YouTube class, our YouTube channel, so that you can always go back and visit. So have a wonderful night, and please set that immediately. I will ask you guys not to sleep yet, but let me just please share that screen again. Trading is a risky business, but we are looking at the potential 420 pips. Okay. So in my other charts, my other gold charts, that's on my forex.com. I've already shown how I think the market is going to move within the next 2 weeks or so. Okay. So I expect that gold is still going to fall. Of course, but the first point I expect to get to, even if it does not get here, is that to get to 27, 28. Okay, so maybe from there it might bounce a little bit back to 49 thereabout, and then fall back to 26.90 or even much below. But whatever happens, I know that I can be confident that it's going to get here, right? Except the only reason I will say it's going to get here is when I see those indications I've told you. When I see 2 bullish candles close above those EMAs, those are the only points when I will know that okay, I have to get out of the trade. Okay, so probably God giving me strength, I might keep a video tonight because I have to see if I enter this trade, I have to see that okay, it has moved a substantial sum before I go to bed. Okay, so if you want to join me, you can please take this opportunity. All right, so you can see my entry point when the market opens 27.70. My stop loss is at 27.86. That's about 150, 160 pips. And then my TP is 27.28. That's about 120 pips. So we're looking at almost 3 RR. So that's my analysis, guys. Thank you very much for your time, and I wish you a good night rest. Bye.
Thank you very much.
Yes, sir.